Hi everyone, I'm Zafar Iqbal, your trusted realtor, and in today's exciting video, I'm sharing how a Canadian government program that can help you boost your family income and increase the value of your home. Make sure you stick around till the end. I'll walk you through a simple 5-step guide to claiming this incredible credit. What if the government literally offered you thousands of dollars to solve the two biggest financial problems every Canadian family is facing? What if they could help you with the insane cost of housing and the challenge of caring for your aging parents all at once? And what if that exact same program could help you build a brand new income stream, skyrocket your property value, and put cash in your pocket every single month? This is not a fantasy. This is a real government program for Canadian homeowners, and I'm going to show you how to use it. It's called the Multigenerational Home Renovation Tax Credit, and it will completely change your family's financial future. This credit is designed to give you $7,500 for building a new home for a relative, but it's so much more than that. It's a government-paid shortcut to creating a powerful financial asset. We are going to break down what this credit is, who can get it, and how you can use it to not only help your family, but to seriously boost your income. So, watch the complete video as I share the 5-step guide on claiming this credit. The problem, the Great Canadian Squeeze. Let's be real, life in Canada is crazy expensive. For so many families, it feels like you're being squeezed from every side. Housing prices are so insane, they've locked an entire generation out of ever owning a home and have left homeowners chained to monster mortgages. At the exact same time, our parents and grandparents are getting older and the cost of retirement homes is staggering. We're talking thousands and thousands of dollars every single month. This leaves families with an impossible choice. Drain your entire life savings to pay for a care facility, or stretch your already packed home to its absolute limit to bring your family in. This crisis is happening in every city across the country. Living with multiple generations under one roof isn't just a choice anymore, it's a financial necessity. Families are desperate for ways to pool their money, share bills, and take care of each other. The federal government finally saw this pressure building and responded with a crazy powerful financial tool to help you. The solution: Unpacking the Multi-Generational Home Renovation Tax Credit. The official name is the Multigenerational Home Renovation Tax Credit, or MHRTC. It was introduced to help Canadians build private apartments for their relatives. Here's the only number you need to remember: $7,500. The MHRTC is a refundable tax credit that gives you back 15% of your renovation costs, up to a maximum of $50,000. So, if you spend $50,000 or more on the renovation, you get $7,500 back from the government. Spend $30,000, you get $4,500 back. It's that simple. Now that word refundable is the secret sauce. A normal credit just lowers your tax bill, but a refundable credit, like this one, gets paid out to you even if you owe $0 in taxes for the year. It's a direct payment from the government into your bank account. This is not a deduction, it's cold, hard cash. But to get this free money, you have to play by the government's rules, and they are super specific. So let's get into the cheat codes. The how-to tutorial. Your 5-step guide to claiming the credit. Getting this right is like a video game. You just have to check all the boxes. Think of this as the official government walkthrough. Step 1. Who is the renovation for? The qualifying individual. This is where it all starts. The entire credit depends on who this new apartment is for. The government has 2 types of people who qualify. First, it can be a senior who is 65 or older. Second, it can be an adult, 18 or older, who is eligible for the Disability Tax Credit, DTC. They just have to be eligible. That's the key. And this is a huge point. You can only claim one of these renovations for a person in their entire lifetime. So if you build a suite for your mom and get the credit, no one else in the family can ever get it for her again. It's a one-time deal. Step 2. Who gets to make the claim? Just because the apartment is for your dad doesn't mean he gets the money. The person who gets the cash can be a few different people. It can be the senior or adult with a disability themselves. It could be their spouse. Or, in the scenario you'll probably use, it can be a qualifying relation. A qualifying relation is a close family member, over 18, who owns the home. This means you, your parents, your kids, your siblings, aunts, uncles. The list is huge. So yes, you can claim the credit for building a suite for your own parent, your spouse's parent, your aunt, or even your adult kid who qualifies for the DTC. Step 3. What kind of renovation qualifies? The secondary unit test. This is the big one. Listen up, because this is where people mess up. This is not a credit for just fixing up your house. You can't just finish your basement, add a bathroom, or install a ramp and claim this credit. The renovation must create a self-contained secondary unit, ARC. The government is crystal clear on this. A self-contained unit needs its own private entrance, its own kitchen, its own bathroom, and its own sleeping area. Think of a basement apartment, a garage conversion, or one of those crazy garden suites they build in the backyard. The point is, it has to be a complete, separate home that lets your relative live with you, but not in your personal space, and it has to be at your main home, not a cottage. Step 4. What expenses can you actually claim? Once your project qualifies, you need to track every single dollar. You can claim a ton of different costs that are directly for building the new apartment. This includes all the building materials, fixtures, and even the permit fees, which get crazy expensive. Most importantly, it covers labor from professional contractors as long as they're GST HST registered. Keep every single invoice. Cash deals under the table will get you nothing. It's just as important to know what you can't claim. You can't claim appliances like a stove or a fridge. You can't claim furniture or decorations. And for all you DIY warriors, you cannot claim the value of your own work. If you do it yourself, you only get to claim the materials you bought. Finally, there's a no double dipping rule. You can't claim the same expense for this credit and another one, like the home accessibility credit. But you can claim different parts of the same project under different credits to get even more money back. Step 5. How and when do you get your money? Getting paid is actually the easy part. You claim the credit when you file your taxes for the year. You'll use Schedule 12 and the final number goes online, 45,355 of your T1 return. Timing is everything. You claim the credit for the tax year, the renovation is finished. So if you start in 2024, but the final inspection isn't until 2025, you claim it on your 2025 tax return, which means you get paid in 2026. You don't have to mail in all your receipts, but you must keep them because the government will probably want to see them later. This is a new credit, so you can bet they'll be checking. If this is helping you and you want more insane deep dives into Canadian money and real estate, smash that subscribe button. We dig into topics just like this to help you get the most out of your money. And I have a question for you. Are you actually thinking about doing a project like this? What's the biggest question or worry you have about it? Drop it in the comments below. I read all of them and I'll do my best to help you out. The income stream, turning family support into a financial asset. Okay, now we get to the part that will blow your mind. How this tax credit is about way more than just building a home. It's about building a financial asset that will print money for years. Picture this in 2 stages. In stage 1, your income comes from money you're not spending. Let's say your parent moves into the new suite. If the other option was a retirement home costing you $4,000 a month, you are now saving that money. That is a massive and immediate boost to your family's net worth. But the real magic happens in stage 2. You are now set up for the future. Life changes. Your relative might live there for 10 years, but eventually that space will become free. And because you followed all the rules to get the tax credit, you now own a legal self-contained apartment. This is a cash flow machine waiting to be turned on. You can rent it out on the open market. In most Canadian cities, a legal basement apartment can easily make you $2,000 a month or more. That income can destroy your mortgage, build your retirement fund, or pay for your kids' education. The government literally handed you $7,500 to help you build an income-producing rental property. On top of the monthly cash, you've also massively increased your property value. A house with a legal rental suite is always worth more than a house without one. When you go to sell, you'll see a huge return on your investment, an investment the government helped you make. Conclusion. The multi-generational home renovation tax credit is one of the most powerful and insane financial tools the Canadian government has ever created. It is a direct answer to the real-world pressures that families are dealing with right now. It gives you a clear path to keep your family close and care for them. But it's also a brilliant strategic move, a chance to increase your property's value, create a financial asset that lasts forever, and build a new stream of income that can give your family security for decades. This is more than a renovation credit. It's a family building credit, a wealth building credit, and an opportunity you do not want to leave on the table. If you found this information helpful, please like, subscribe the channel, and hit that notification bell so you don't miss future insights. Thanks for watching, and I'll see you in the next video.